What's up everyone? In today's video, we're going to go into the specifics of stacked imbalances and how to correctly read them in order to use it in your trading. Now most people in the industry, they use stacked imbalances as a continuation trade, something where they have it set on diagonal imbalances. So the way I have my settings set and the way I'm going to be teaching it is based on horizontal imbalances. So I'm just rating it horizontally like this. So 41 is greater than 7 by 400% or more, there's going to be an imbalance. And for the NQ 5-minute chart, I have on a 2-tick aggregation. And so, when reading these imbalances chart, what makes this imbalance right here bearish, as you can see, it acts bearish right there, but then also what makes this imbalance bearish, right? You can see that these are buy imbalances. So why would this be bearish, but then this also be bearish? And we're going to go over that today in this video to help you guys understand it more. Really quickly, this is one of the methods that I use in the Discord to help me read the price action on a daily basis in NQ. And now this isn't going to go over my whole entire model of every single thing that I use to look for in a trade, but this is a pretty important part of it. And using this into my methodology, these are my stats in the month of January. You can see that we had 11 setups, a 91% win rate, and we had a very, very good month overall. Made a lot of withdrawals from prop firms, and a lot of our students have made their own withdrawals as well. And if you want to learn more about our Discord and how I teach, you can join us in the link below. So first things first, we're going to be going over what makes a stacked imbalance bearish and what makes it bullish in a red candle. So when we have a strong red candle like this, where the open is right here, and the close is near the end of the candle, right? You can see that this is the full candle and the body closes right near the end of the candle. And then in the middle of the candle, we have a bearish stacked imbalance because 42 is greater than 3 by 400% or more, 22 is greater than 0 by 400% or more, 40 is greater than 9 by 400% or more. And so we're going to consider this a very strong bearish candle. And what we're going to look for is for price to have a move down and then continue back up into this area where it will get used as resistance to push back down. That's what we're looking for in this type of candle. A very, very strong bearish candle where most of the body is red and very little wick at the close, and then a bearish imbalance by 2 or more in the middle of the candle. Now we have a red candle that opens up here, closes down here once again, but it's also still very bearish because once again we have a lot of imbalances right here. Most of the candle is the body, right? We have very little wick and very little wick, but we have a stacked imbalance right here. We have a stacked imbalance right here. This is considered 2 levels because of the 2-tick aggregation. So this is technically 4 stacked imbalances, but we're looking for 2 or more. And then we have like 5 stacked imbalances right here, so pretty major. But what also makes this candle very, very bearish is people will see the stacked imbalance at the top and say, oh, well, isn't that bearish? We have some buyers up here. This is actually very bearish based on the reaction, because what happens is the candle opens right here and then we get a push up, and what happens is these may be buyers or these may be limit orders that are getting filled on the ask for sellers. Now when people place limit orders and they're looking for sells, they're going to get filled on the ask. That's what we call passive sellers, and they get filled on the ask. And now when we see, and we're going to go over it later, when people are looking to buy the market and they set a limit order, they're going to get filled on the bid, and we'll go over examples on how that's a passive bid, which is pretty much right here. This is very bullish because it's a passive buy into the market. So this would be a very bearish example because people are filling their sells, and then we know it's a sell because of the reaction off of it. We open right here, we go up, people fill into their sells, their limit orders, it creates this stacked imbalance, and the initial reaction off of the stacked imbalance is to move back down. And now this is the type of stacked imbalance that I use on a daily basis, looking at these trapped buyers or passive sellers and playing the reactions off of them. Now these are my favorite stacked imbalances to play because we're technically trapping traders. And so this is a very overall bearish candle. Everything about it is bearish. One, even though there's blue, technically buys, it's bearish because of the reaction based off of it. We have a large seller, we have stacked imbalances, so overall very bearish candle. Now let's go on to the last example of red candles, and now this would be a bullish candle. Even though it's red, it's a very bullish scenario because vice versa of what happened over here. The candle opened over here and then it gets this move down, and it gets to move down into some limit orders right here. and these are limit orders that get filled on the bid, probably passive buyers. But then there's some large limit orders that get filled right here, some passive buyers coming into the markets, and they get filled on the bid. And you can see how much it's outweighing. There's 0 transactions on the ask, all on the bid, because these buyers, they're filling on the bid, right? And you can see the initial reaction. We know it's buyers because of the initial reaction that happens. We get a move up, and then the candle, it closes right here, right? So buys, people buying on the bid passively, we get this move up, and then the candle closes right there. So we would consider this overall bullish because of this area right here. Based on the reaction of this area, if it were to have closed, let's say this candle were have to close down here, right? This is the whole entire candle. Say this is all red, and the whole entire body is from right here to right here. I would consider this overall bearish because the majority of the stacked imbalances were in the body of the candle, but the majority of the stacked imbalances were on the wick of the candle, meaning that these are some pretty aggressive buyers that came in because they were able to push price up. And so once again, I would look to play the continuation of longs, and look to play this reaction up to the upside. Something like this I would look to use as resistance later on after the initial reaction to get moved back into there. But something like this, I'm not going to really look for the move up and then to play the bounce as it comes back into this area to move back up. I would look to play the initial reaction off of this up. Now this is the opposite scenario for green candles. Now even though this candle is green and it closed green, you can see that in the body of the candle there is no bullish stacked imbalances. Where does these stacked imbalances show up? They show up on the top wick of the candle, implying that there may be passive sellers into the markets, and if we see a red candle after this, we may likely get a move down. Like I said, these are the kind of stacked imbalances I look to play mostly in my daily trading. Now this would be a bullish stacked imbalance because the candle opens down here. You can see we have some bids come into the market, some buyers, and the candle closes right near the top of the wick. And in between, right in the smack middle of the candle, we have a bullish stacked imbalance. And so what I want to see is the market move up, come back down, hold this area, and then go back up. Now this is another scenario of a bullish stacked imbalance. You can see we open down here, we come down, we go to test this area, fill some limit orders, even though it's technically selling stacked imbalances. Based on this reaction that we see of this move up happening right after, we can tell that it's probably limit orders getting filled on the bid of buys, and so it's a bid up, and then this candle closes near the top of the wick. But you can see, even though there is some wick right here, there's no stacked imbalances, no traps to be played, and instead the stacked imbalance that shows up is in the middle of the candle. So once again, we're looking for the move up, come back down, hold it, and then push price up again. So now we'll be going over some examples live on the chart. If you want this footprint, you can find a 20% off discount code in the description. It's the most powerful footprint on NinjaTrader 8, and it's the exact one I use on a daily basis. So like I said, let's go over some examples in the chart. We're going to go candle per candle basis on how I would look to trade it. We're just going to go through some random days. I'll go scroll random times on my chart, and I'll play it out live for you guys to see my thought process on what I would be looking at real time. So we'll start out with, these two candles right here. You can see that for the most part they're closing pretty bearish near the end of the wicks, but the stacked imbalances that show up are in the top of the candles, in the middle of the candle. So we'd look for this area to be used as resistance, and you can see we get an initial move down. We look for this area to be used as resistance later on. Same thing with this candle. It's kind of more towards the end of the candle, so I would kind of be careful. Ideally I want to see the stacked imbalance show up somewhere right here rather than right near the close. I don't really like playing those too much, but this is an area where I would actually look to play real-time intraday. You can see how we come into this area right here. We get some passive buys fill into the market, we get initial reaction, and then as we go to test that area back down, what happens? We get some more passive buys come into the market, and we get a strong reaction once again. And so this would be an area I would look for longs. This is something I look for at my levels that I give out every single day in the Discord. Is I want to see this kind of price action going on in it with a large participant come into the markets. And so what I'll do from here is I'll go on to a smaller time frame chart, like a range chart, and I'll look at the price action there. So like I said, I would look onto a range chart, and this is the price action that's going to be presented to us. we can see a large amount of negative delta go into that level, which is good. We want to see that because we can potentially trap some sellers. And then we can see a large market buy order come into the markets, a large player, and you can see those imbalances that form. Those were the sell imbalances, those passive buys that came into the markets. And so I would wait for initial reaction when this happens, and I would wait for that large participant to come in. And once I see, some strong positive delta and initial reaction, I would take a long. And so my long entry would be somewhere around here. Once I see that initial reaction, you can see that we get a move up. And so as we scroll past that, you can see right here, we get the opposite scenario, where the market moves up, we get some passive sellers, and the market moves up again, and then we get some more passive sellers. You can see some bullish stacked imbalances, but the candle closes red, and then a large participant comes into the markets. And so because we have this reaction going down from this, right, these passive sellers come into the markets, candle closes red, I would look, if it's an important level that I'm watching, I would look for a bear scenario. And so as we go into a smaller time frame, we can see those stacked imbalances come up on the buy side, those passive sellers. We get a large market participant around this area, and then we get some aggressive market sells, market sweeps come in towards the close, and then we get a bearish ratio. And so this would be around the area where I would take a sell, and we can see markets push down. And using these around important areas in the charts was how I was able to achieve a 91% win rate in January. But now let's look at a scenario where we want to see, price hold at a level. How do we find support and resistances with stacked imbalances? Now we can see we have a very bullish candle here. Very, very bullish, coming in off of lows, and we get a huge stacked imbalance coming in on the green candle that closes right near the top. So this is something that I would watch for to be used as support later on. You can see the amount of stacked imbalances on the buy side, and you can see the initial reaction is we get a move up. So the initial reaction is a move up, and so we'd watch for this to get used as support. And you can see we get used as support right here for about 33 points. This isn't something I would typically take or use in my intraday a lot. I find my levels another way, but if I see like a large player come in around this area, I may take it for a scalp, and we'll look at examples of where that actually happens. And so I'm just going to scroll to the beginning of my chart here on the first day, and we'll go through the process of looking for these bearish or bullish candles with stacked imbalances coming in the middle of the candle. So we're looking for very, very obvious stacked imbalances in the middle of the candles, not at the top or bottoms anymore, because I want to get you guys understanding of how to play these a bit more. Now you can see that we do have a bearish stacked imbalance right here, a bearish stacked imbalance right here, but the initial reaction is up. It's just up, right? We don't go straight down. Now we can mark out, this area, let's say right here, and right here is a stacked imbalance that shows up, because this is a very bearish candle. But what I want to see is the initial reaction to go down and then up, but it just goes straight up. But what we can do, it's a bit more of a risky play, not as high quality, is wait for that initial reaction down, and then later on we would want to see that price hold as resistance. And let's see what happens. Well, that was the end of the trading session. We'll just keep scrolling, and yeah, so at 8:45, we end up using it as resistance. The large player ends up coming in a bit later, and then market goes down. But like I said, not the highest quality way to play that. I would ideally want to see the initial reaction. So I'm going to look for a spot where that actually happens for the highest quality play. This isn't something that's super high quality, right? Because you can see there's stacked imbalances at the bottom. The candle closes near these stacked imbalances in the middle. So this isn't an overall very bearish candle. This candle right here, there is a stacked imbalance in there, but the initial reaction looks to be not straight up. It just looks to consolidate and probably go down. So that isn't a candle I would look to play as support. All right, I want to see a very, very obvious aggressive setup. Something like this I wouldn't play because it's just one singular stacked imbalance. I want to see two or more. This is a very, very obvious bullish case right here. We'll see if it gets used as support or resistance, but everything over here pretty bullish, right? You can even see in this price action, passive buys come into the market, price pushes up. Passive buys come into the market, price pushes up, and then we get a very strong positive green candle with the triple stacked imbalance in the middle of the candle while the candle is closing near its highs. And so we'd watch for the move up and a move back down for this price to hold. And so we'll see if that happens. So what you want to see is you want to wait for large participants to come into the markets in order to start playing these areas. And you can see we get these large participants, so you wouldn't take it with the limit order set right here looking to long. Once you see these participants and prices start reversing, and then you see a 100 lot buyer and the candle closes green, maybe this could be your long entry and you get 43 points. That's just something of how I would play it. But something like this right here, just looking at it, this is very, very bearish right here. Very strong negative red candle closing near its lows. We get a bearish stack to bounce right here. We get a bearish stack to bounce, right here. And we're going to look for this area to be used as resistance later on. All right, not a high quality stack and bounce, because what's the initial reaction off of this stack and bounce is down. So not something I'm interested in playing. And if you had on a 1-tick aggregation on the 5-minute chart, I like to have on a 2-tick aggregation. On my smaller time frame charts, I like to keep on a 1-tick to have the most accurate data possible. But if you were to have like a 1-tick on this would technically be 2 levels, 2 levels, 2 levels. You would probably have to look for 3 stacked imbalances. But because I'm on a 2-tick, I'm only looking for 2 stacked imbalances. I think 2-tick on a 5-minute chart is a lot more clean, and I find way better opportunities. But right here is a pretty bearish scenario. What I don't like is how there is some slight passive buyers into the markets right here, and price eventually has a slight move up. But we'll see how price reacts around this area. And I mean, yeah, it gets used as resistance initially as we go back in. I'd have to see on the smaller time frame chart exactly what price looked like here, but this is a pretty bearish scenario. Passive sellers going into this. I mean, it's almost immediate reaction, same day and everything. You don't even have to wait till the next day of price reacting to the stacked imbalance in the middle of the pretty bearish candle. This isn't, like I said, the most bearish candle I've ever seen, just because of these slight small passive buyers right here. But if you look at it, there wasn't a lot of passive buyers, 9 contracts, 7 contracts, which isn't anything crazy. If you were to look at these sells right here, 43, 19, 10, 41, 12, a bit more aggressive right there. So we can see right here, we do get a nice reaction from this stacked imbalance right here. So we're going to mark this out on our chart, see if it gets used as resistance later on. Another pretty nice reaction there. I probably wouldn't mark this out just because it's at low a day. If I want to play it, it'd have to be something intraday, like it'd have to be played out right now, and nothing really shows up there. Let's see if this pretty damn accurate, right? You go up into this level, a large seller comes in, you can probably scalp this for a few points right here. I mean, from the time this guy comes in, that's about 50 points. So pretty solid reaction there. This is a bit of a risky stacked imbalance. It shows up in the lower third of the candle. I don't really like it too much, but we'll see. We'll mark it out for now to see what happens later on in price action. See if any strong seller shows up. So I mean, that would have stopped out, right? 68 contracts. If you were to take something off of this, probably would have been stopped. But let's continue. No initial reaction. I mean, this level sort of taps again. You can see that a passive buyer comes into the markets, holds this level, price pushes up right at this previous, what was supposed to be resistance, right? This was supposed to be a resistance level, broke through, didn't get used as resistance, and now it's getting used as support. And so it's the same thing as charting, on the hourly time frame, where an old support may be now resistance, right? Support can flip into resistance, and resistance can flip into support. Same things can happen here. And eventually, now it's probably going to be used as resistance now. Yeah, figured. So that played out, intraday. Probably would have got stopped, on a few plays if you tried to play that one. Something I'm seeing right now is this is a very, very solid resistance area right here. This looks super bearish. I'd be pretty confident in a play later on. I have no idea. I don't remember what goes on later after this. I'm just saying right now, this is a very significant area. If I were to see, as price comes back down, goes back up into the area, a large participant, I would definitely want to take a short off of this, but we'll see what happens, if anything happens, as price retests into that area. I mean, this is pretty, is this bullish? Yeah. So after this, we get some initial move up. I'd mark out this area. It's a pretty bullish candle right here. Doesn't hold. It's fine. You know, there was a large participant. Actually came in on candle market close. That's probably why. But I'm very interested to see that area we were watching above. Where is it? It's quite far above. There we go. Yeah, we get a small reaction off of it during lunchtime. Right, this is why I analyze the smaller charts. I don't want to wait for a 5-minute close to come in, because by the time a 5-minute close comes in, that's already 15 points. Typically, there probably would have been a 30 range setup here, considering there's a large participant. You know, there probably would have been a smaller time frame entry, and you know, let's just say you get filled right here. Let me fix my chart. Oops. Let's say you get filled right there. Off the initial reaction, you know, it's about 26 points. So pretty solid play. And yeah, so what was once resistance now gets used as support. Example A, example B, you know, gets used as support. But so let's just go over a few more examples. Intraday here. I mean, this is a pretty bullish stacked imbalance right there. It's very bullish. Let's see if we get anything. And this is a very bearish stacked imbalance, super bearish. Coming in off a high day, some buyers trapped at the top. You get this massive red candle, and these strong negative stacked imbalances. As price, you know, you get the initial reaction, and as price retests into that area, what happens is you get a large participant come into the markets, and then you get the reaction down to 55 points. Yeah, and that seems to be pretty much it. You know, this is the most recent day. This will be the last day we'll do. That's one stacked imbalance, so I'm not going to go over that. I think this was NFP right here. Pretty bullish stacked imbalance right here. Another one right here, two in the same candle. So, you know, pretty much marking out this area. Initially gets used as support. You know, who knows? I'd have to watch it real time to see if there was a large participant. Because sometimes, you know, my indicator that I use to watch for large participants on the 5-minute doesn't always mark them out. In order to find a, let me actually show you real quick. Right, in order to find a large participant in the markets without that indicator I have on my screen, what you can do, we'll use this example right here, 128 contracts, is if you see market come down into this level, you know, you can see it's trading 10 lots, 10 lots, 20 lots, 30 lots, 60 lots, and let's just say 10 lots got placed right here, and then within half a second, in the blink of an eye, randomly 120 lots came in to make the total 128 lots. That's probably a large buyer, right? And then you can see that the second of the candle duration is 37 seconds. This wasn't a 2-minute candle or 3-minute candle where price came down, filled 20 lots, went back up, came down, filled another 20 lots, went back down, filled another 20 lots to build up into 128. This was most likely, you know, a participant coming into the markets, filling 100 lots right away, gets used, and then a price immediately closes green. And we can tell that because it's 30 seconds. So that's kind of how I analyze candle duration and looking at these large orders to tell if there's a large participant or not, and watching it real time will tell you a lot. But I'd have to watch the price action real time to know if there was a participant or not in the markets. But I think, you know, those are pretty good examples. This isn't something I would mark out at all, because what's the initial reaction? It's just up. The initial reaction is just up. So not the best place to look for sells. But, you know, I think that'd be enough for you guys to understand how I trade stacked imbalances at highs, how I trade stacked imbalances at lows, and how I look for support and resistance areas later on in the future with stacked imbalances. If you guys enjoyed this video, please be sure to leave a like, follow me on my Twitter, join the Discord, and I'll see you guys in the next one.